This is what we call the property clock. And the property clock is really important as an investor to understand how it works, because you're going to have, you need to understand when there's a peak market and when there's a low or a cold market. So the way the clock works is when it's at 12 o'clock, it's peak. When it's at 3, it means it's declining. When it's at 6 o'clock, it's the bottom of the market. When it's at 9 o'clock, it's rising. So obviously you want to avoid buying high and selling low, and obviously you want to do the exact opposite. So if we have a look at where New South Wales is at the moment, New South Wales or Sydney is actually a really, really hot market. So it's at the peak of the market. And unfortunately, that's where most investors enter into the market, because they hear about it in the news, they hear about it in the media and the papers, and they get excited about what everyone else is doing. So they go and they buy at the wrong time. However, what will happen is they have to wait a full cycle before they enter into another rising market, which means, chances are they'll just basically stay stagnant, or they'll plateau out for a little while. When you look at Victoria, Victoria's approaching the peak, so it's still got a little bit left to go. There's still a lot of activity happening in Victoria. There's a lot of activity and there's a lot of investment still happening in there. However, we've sort of pulled back our efforts from there because we're obviously looking at other states. Next in line is WA. I know this is one that we spoke about in the previous slide, but WA is an interesting example because I'm sure you would have heard 5 years ago there was a lot of talk and activity around WA, all the mining activities, etc. And interestingly enough, it's actually in a bit of a decline at the moment because some of these projects haven't gone through, and it's in a state of decline at the moment. So we're obviously not doing anything in WA at the moment. However, we'll look like a good market in the next 3 to 5 years. Once it hits the bottom, that's obviously a good time to be entering into the market. When we look at where SA is at the moment, SA is actually at the start of recovery. So interestingly enough, we've had some of the highest median price growth in Adelaide than any other state in the country in the first quarter, according to RP Data and Residex. We've started to see auction clearance rates reducing, meaning we're clearing more properties at auction, and the time on market that's spent has also been reducing. So we're starting to see the early signs of what would generally happen before you have a strong market. And for us, that's really important because generally that's a good indication of a market that's worthy to start putting some money into. Over the next 3 to 5 years, we'll probably only see 3 to 4% growth on average across the board. However, property is a long-term investment, so it's not something that you want to invest in expecting to make a return in the next 12 to 18 months anyway. So that leaves us with Queensland. So Queensland has been one of our most popular spots particularly in the last 18 months. Last year, so in 2015, we saw 35 suburbs in Queensland have more than 10% growth in the capital median price. So that meant we had clients that were entering into building contracts for under $400,000, and then by the time they were completed, they were worth a lot more than that. They were worth in the mid 400s. So, and you don't generally see that in South Australia. You don't see that in slow markets. You generally see that in rising markets. We've got some areas at the moment which have got massive forecasted growth because of the population growth that's going on in these areas. And I'm talking about internal migration, so people from within Australia moving to Queensland, whether it's climate or for work or whatever it may be. But we've also got external migration, so Queensland being the closest city to the South Pacific and some of the Asian countries, it's obviously the first point where they land. As well as things like the 2018 Commonwealth Games that are happening. It's obviously had a lot of investment from a federal, state and local level as far as upgrading infrastructure, accommodating for some of the growth that's happening. So all of these little things add up to obviously give us a really good, strong market. And what we're finding is Queensland, particularly to give you the exact spots, it's between Brisbane and the Gold Coast. That's where we're finding the biggest driver of properties that are moving at a rate that you can't even imagine in South Australia. So in summary, at the moment we're focusing our efforts as far as Silvertail goes in South Australia and in Queensland. For someone who wants to enter into a market that's currently got some action and they can see some results in a quicker time frame than they would in SA, we're obviously recommending Queensland. However, if someone wants to invest in South Australia and is happy to take a little bit longer, then we don't have any vested interest in Queensland or SA or anything like that.